Hello guys, I hope that you're well. This is again another short video, and this is from the NSC May-June 2024. So we already have done 1.1, which was the precision calculations. Now we're going to do 1.2, which is the correct net profit after tax calculation. So what we are going to do is, we know that this question was supposed to be done together with the statement of financial position. That will allow you to be able to finish the exam in time. But for the sake of this lesson, I'm just going to do only the correct net profit after tax calculation, and then when time permits, then I'll also look at the completion of the statement of financial position. So that means I'm going to only look at information C, and the information reads, the bookkeeper has calculated the net profit before tax as 1,150,000. And then it says, the pre-adjustment balances to be adjusted are, and then we're given this information here. Only the adjustments listed below must still be taken into account. So we're going to start taking that information into account then. And the first one is audit fees of $45,600. We're still owing. So we're here on number 1. We're being told that these audit fees offered $5,600 are still owing. So it's owing or outstanding. So we know that once an amount is still owing, an expense has been incurred, but not yet paid for. We're still owing. That is now our accrued expense. And with our accrued expenses, we know that if we're doing the correct net profit calculation, it will decrease the net profit. In other words, it's an expense that was incurred but not yet recorded. So I'll come here and then I'll say audit fees, and then I'll have my bracket here, and then I'll put in my 45,600 like that, because I have an expense that was incurred but not yet recorded. And I know that would also go to my TRED in other payables. So I'm just going to come here. I know I have an accrued expense of 45,600. So I'm going to come here, and then I'm just going to say on my trend of the payables, plus 45,600. This, remember, was from the list of balances already. We have that one. Let's go on to the next one, which is number 2. It says, a donation of 100 blankets was made to a children's hospital, but the donation has not been recorded. So we have an expense that has not yet been recorded. And remember, this must also affect your inventory. Then it says the business uses the weighted average method for valuing blankets. I think we cannot overemphasize the aspect of you knowing your inventory valuation methods before you go and sit for paper 1 as well as paper 2. The stock records for blankets reflect the following. So we need to calculate the weighted average for the blankets. And the simplest way is to take our 6 or 3 here. We simply say our 603,000, and then we divide it by the quantity, which is the 1.5 over there. Let's see if our calculator is close. There it is. So to get that, we're simply now saying it is the 603, 6 or 3,000, and we're dividing it by the 1.5. And then that would give you 4 or 2. Okay, so this gives me 402. So the weighted average per blanket is 402. And we know that it's 100 blankets that we donated. That means I now have an expense that I must record here. So I'm coming here to now say donations. All right, and then I'm going to say I've donated 100 blankets, and each one is a weighted average of 4 or 2. So on my calculator, therefore, I'm now going to say 4 or 2, multiply that by 100. That's going to give me 40,200. So that is going to be in brackets because that is an expense that was not yet recorded. And when I then come to my inventory, I know that is going to decrease my inventory. So I'm coming here to say minus 40,200 because the blankets are part of the inventory that was not yet adjusted for. Let me come now to number 3. Number 3 says, rent was increased by 1,300 per month from the 1st of January. Okay, so for us to understand this adjustment, let me see if I can have the board here. So we are told that rent was increased by 1.3 per month from the 1st of January. We understand that our financial period is ending on the 29th of February. 29th of February, that is 2024. That means it began on 1st of March 2023. And then we are told that on the 1st of January, here on the 1st of January, that is the 8th, 2024, the rent was increased by 1.3. Then we're told only the rent for the period March, which is the beginning, this is the March, the beginning, to 31 January. So we received rent from March up until 31 January over there. So that is the rent that we've received. In other words, the examiner is trying to tell us that we have received rent for 11 months. The February has not yet been received for. So it therefore means if I can come and see my rent income here, which is $287,300. This is rent for 11 months, but one of the months has an increase. One of the months has an increase because we're told that rent for January has increased by 1.3. So it's simply kinder than I subtract the 1.3. So it's 287,300 minus 1.3. Let's see if we can get the calculator. So I'm saying 287,300 minus the 1.3. And that is going to give me 286,000. So 286,000 becomes my rent for 11 months before the increase. So I divide that by 11, then I'm going to end up with 26,000. 26,000 now is the rent per month before increase. Then I come and I increase it. Remember, it increased by 1.3. So I come here, then I add my 1.3, so it's 26,000 plus the 1.3. And that would give me 27,300. This is the rent per month after increase. So therefore, this becomes the rent for the month of February, which has not yet been received. In other adjustments, they'll tell you the rent for February is still outstanding. In this case, they used different language or different English to say. They simply said only the rent for the period March to January was received. Now we have to realize that February, which is the last month of the financial year, has not yet been received, which is the 1 month, 27,300. So now we have accrued income, with income that has not yet been accounted for. So I'll come now to my calculation of correct net profit, and I'm coming to say rent income. All right? And I know my rent income is 27,300. So I have income which has not yet been recorded. So it would increase my net profit in this case. And I know if I have income that I have not yet received, that would now go to my trade and other receivables. So I'll come in, then I'll say plus 27,300. That is what you do with your accrued income. Let's quickly go on now to adjustment no. 4 here. And adjustment no. 4 is a very familiar adjustment. You would have seen this in your previous rent adjustments. All right, so let's see what they are saying over here. And it reads that the company has one director. So let's come here. This is the first director over there. That is the one director. And we are then told at the beginning of the financial year, Jenny has been paid, had been paid in advance for 2 months. Okay, so this director here has been paid for 12 months, which is the normal financial year, and then has been paid in advance for 2 months. So apart from the 12 months that we are supposed to pay this director, we've paid 2 more months. That means we're dealing with 14 months in this case. Okay, cool. Let's go on and see the next one, what they will say. In the next one, then they said to us that a second director, Frank, so this is Jenny, and the next one is Frank. And we're told that the second director, who is Frank, was appointed on the 1st of December. So if it's from the 1st of December, his monthly fee is 20% lower than that of Jenny. Frank received his fees due to him, so we don't owe the new director anything. So we want to know, how many months have we paid this new guy who is Frank? He came in December, the 1st of December, so we're going to count December, January, February. So we have 3 months, okay? And we don't owe him anything. Now, we understand that for Jenny, her director's fees were complete. They were 100% because there was no change in them. But for Frank, the new guy, he is not going to get the same salary as Jenny. Rather, it would be 20% lower. In other words, he's going to get 80%. So we can then come here and say, for the first guy, who is Jenny, it's 14 months times 100%. All right? And for Frank, it is 3 months times 80%. So I think this should ring some bells. You have seen this in some rent adjustments. So it'll be 14 by 100. Let's have our adding machine so that it becomes easy. So it's a 14 by 100. That would give us 1,400 over here. Okay? And then it's 3 by 80. And then the next one is 3 by 80. And then that would give us 240. Then here we have 240. Then it would be 1.4 plus 240. Okay? And then that would give us 1,640. So this is the total that we have received for these 17 months. Okay? But considering that they were not the same. So what we want now, our problem, remember, is Jenny, because Jenny has been paid these 2 extra months in advance. So say those 2 extra months, remember it's 100. So we're dealing with 200. So what we want is the 200, and what we curve is the 1,640 multiplied by the director's fees of 852,800 times 852,800. Let's see if we can get our adding machine, that is. So we're now going to say, we want your 200 over the 1,640, like that. And then you multiply that by 852,800 and 52800. And then it would give me 104,000. So the 104,000, this is the director's fees that has been paid in advance. That is for these 2 months. Okay, so I have a prepaid expense in this case. When I have an expense paid in advance, that means I have subtracted more when I was preparing my initial statement of comprehensive income to get this net profit before tax. So I recorded more of the expense. In order for me to correct that, therefore, I'll come in and I'll say my director's fees. So as I was saying, I'd say here, director's fees, and I know that my director's fees, remember on the calculation, I said what I want was 200 over the 1,640, then I multiply that by my 852,800, and I ended up with 104,000, and this 104,000, am I adding it or subtracting it? Definitely I'm adding it to my net profit because I'd overstated my expense. So I'll then come, remember, in the statement of financial position, once I have a prepaid expense, therefore I come to my trade and other receivable, and I'm coming to say plus 104,000, like that. And then the last adjustment that I'm going to do here is my income tax. So first, you have to quickly just close this aspect here, and if you have a calculator close, you should get 1,195,500. And then the next thing that you bring here is now your income tax. All right? So on your income tax, we are told here the assessment from SARS indicated total income tax for the financial year as $351 after all adjustments were made. So I'm just coming here to say minus $351,000. And and then I close my bracket. Therefore, I'll end up with 844,500. That becomes my net profit after tax. Okay, so watch out for the next video. I hope to do the statement of any opposition. Cheers.